Hello and welcome to Money Talks again with me, George Pitcher, and Edmund Shing of BCS Asset Management and curator of the Idle Investor website. Edmund, you've written your column for IB Times UK this week about opportunities for investment in the oil industry. Let me ask you first of all, prices of crude oil are absolutely tumbling. Now, I don't understand why there isn't a price war at the petrol pumps, and whoever is competing most effectively would surely be the best investment opportunity.
You'd say that, George, and you'd be right in saying that oil has plummeted. The crude oil, as in the stuff coming out of the ground, is at a 5-year low in terms of price at $66 a barrel for Brent. So that's really, really low. However, what we pay at the pump, particularly in the UK, don't forget, George, is more about tax. 60% plus of the petrol pump price are purely taxes of one sort or another that we pay to good old George Osborne. So if anyone's the winner, frankly, it's always the HM Treasury, less so the consumer.
Though he has been freezing those rates in recent budget announcements, hasn't he?
He has. And to be honest, consumers are starting to benefit. If you notice, Black Friday this year was the biggest retail sales day of the year in the UK, and a little bit of that was due to the fact that petrol pump prices are coming down, albeit slowly.
Now, for investors in the oil industry, you've written in your column this week an intriguing line that BP, that enormous British oil company, could be the target of a takeover. That's extraordinary, because isn't BP worth about £140 billion?
You're right, George. It's scary, but these mega mergers and mega takeovers have been known before. Bear in mind that the largest oil company in the world, ExxonMobil, is exactly that, a mega merger between Exxon and Mobil. Yeah. So there's no reason why a company like Royal Dutch Shell, which is the mooted takeover partner, could be targeting BP. Remember that the market size of BP today is only 64% of that of Royal Dutch Shell. Now, back in 2009, they were level pegging. So their fortunes have really radically changed in the last 5 years.
I see. Would there be antitrust competition issues there that could stop such a takeover?
It's likely there would be, but probably more at the UK retail end in terms of things like petrol pumps and perhaps also in terms of refueling aircraft. But in terms of digging the stuff out of the ground, not really, because that's a big, big global industry.
So is that the only thing that's pushing BP's share price for the investor now? There's takeover speculation that Royal Dutch might be in the market for BP?
Not at all, George, because I think you should also remember that today BP gives a dividend yield of well over 6%. Now, bearing in mind what pathetic cash interest rates we have, that actually might be quite interesting. Yes, you have to be a value investor. Yes, you may have to be patient, but in the meantime, you're getting over 6% on your cash.
Right, thank you very much, Edmund. We look forward to seeing you next time here on Money Talks at IB Times UK. Thank you.